Hey team, in this video we will be analyzing the market for gold from a technical and fundamental perspective. Do watch the video till the end to know exactly the position where we should position ourselves either on a bull or either on a bearish scenario for the market. Now coming on to the technical perspective, from 6 January we have seen, or from the start of the 2021 we were seeing a bearish momentum entering in the market, as you can see on the chart. From some around 1958 and till now we can see this particular bearish momentum has continued, and the market has made the low of 2021, which is some around 1713. Now currently what we can see, this particular blue trend line which I have drawn, market did took an resistance on this particular blue trend line on some around 24 till 23 Feb, and we did see since then a steep sale off entering into the market. Now first analyzing how the gold trades is that whenever we did see a huge steep sale off without any break, we always see that the market do recover from such kind of sale off. So what my expectation is that we can see a retest towards this particular support zone, and then we can particularly see a bounce back from this particular support zone. In the video ahead, in the video I will explain why this area is in major support zone, which is an area of some around 1702 till some around 1683. Before that, if you haven't subscribed, so do consider subscribing, as I will upload the analysis on the gold on the daily basis and on the weekly basis too from now. So first analyzing why this particular support zone from some around 1702 till some around 1683 matter. On a 4-hourly chart, here what we can see, some around 25th February 2020, which is some around a year ago, we did see that the market was taking resistance. Then again on 10 March we did see that the market took in resistance, and we did see a huge sale off. We did see a huge sale off after taking this particular resistance from some around 1692 till some around 1459. Then again we did see a steep sale off, as I have suggested that here we potentially experienced a steep sale off. As we go into the history or into the past, again here as we did see a sale off in 2020, we did see a recovery which was also steep upwards. So what I am expecting is that a recovery in the gold if the market is able to hold this particular area. So into the past, we can see that the market was taking support and resistance on this particular support zone, which is in range of 1702 till some around 1683 several times, some around 16 April, then on some around 1st May, then around 7th May, and then around 12th May, and then 27th May, and then 5 June, and then the last support was taking some around 16 June, and then we did see a huge bullish run up upwards. Now first, many traders were confused why we did see this particular sale off into the market despite US announcing to give stimulus packages. So the first of the fundamental reasons why we did see this particular huge sale off is the 10-year treasury note. The benchmark for the US bond surged on the Thursday to above 1.6%, a level not seen since February 2020, since we did see this particular bullish sale off. Thus, in 2020 February, we were seeing that there was a bearish momentum into the 10 years yield, and the relationship between the yield bonds and the gold is inverse, which means whenever the gold would rise simultaneously, the yield would decrease. Now currently what we can see is that the yield is increasing and simultaneously the prices for the gold is decreasing. So that's the one reason why we did see a huge sale off entering into market. Then we have seen, then the another potential reason is the flow of investment. So the traders who have, or the investors who have invested in the US stock exchange and the gold in order to hedge against the inflation or in order to make profits, have taken out their capital from US market and from the gold, as we can see a huge sale off in the US market on Friday and Thursday. And in the gold, simultaneously those traders or investors have invested in the 10-year yield, due to which we have seen this particular steep sale off into the market. Now coming on to the technical perspective, what a trader should do, we would be suggesting to go or trigger a long on the Friday, on the opening on the Monday, if we did see a retest towards this particular support zone of some around 1702 till some around 1683. If we did see that the market did hold this particular position, or we did see 3 to 4 hourly candles closing above or on this particular zone, this would trigger that we will see more bullish momentum entering into the market. Thus that would be a potential signal to go long. So we can trigger a long position if we did see 3 to 4 hourly candles closing on this particular range, 1702 till some around 1683. So our stop losses would be placed just below this particular support zone of some around 1675, and our first take profit would be placed some around 1764, and our final take profit would be placed on the resistance some around 1788. So this trade will give a risk reward of approx 1:1.4, 1:4.4. Now coming on to the bearish scenario, if we see that the market did close below this particular support zone in a range of 1702 till some around 1683, or the market closing some around 1669, this would trigger that we have seen that the bullish momentum in the market has over, and now in the long term and in both in long and in short, we would see that the market would show some bearish momentum entering into the market. With that said, our stop losses would be also hit of the long position which we have triggered respectively in some around this particular area. So in order to hedge our losses and to make some profit, we would go for a short position for the market, which is in range, or our entry trigger point for going short would be in range of some around 1657, where our stop losses would be placed some around 1690, and our take profit would be placed some around 1610 till some around 1615. So this trade will give an extra reward of approx 1:1.3. So both trading opportunities are explained what we should do after the nosedive which we have seen, or a huge sale off into the market for the gold. If you are new to the channel, so do consider subscribing. If you like the video, do like, share and comment below. Thanks for watching.